Good afternoon, 9/14/2020 S&P 500. I have the weekly chart. One of the things I'll point out very clearly on that S&P 500, because of the various different 11 sectors, they were rotating and whatnot. So basically, we're holding the 10-week moving average on that last bounce down, and we did, and we're holding it today. Now, on the daily, though, my friends, and whatnot, what we have on the daily is that the 50-day moving average, the blue line, held. So now that we've bounced, we're going to have to deal with the 10-day moving average, which is above here, right around that 34.23, 34.25 area, right up there where my trend line is. Okay, so that's going to be those highs, which is going to be this top of the red bar, and then that's going to be these lower areas right along here as we go through here. Should the S&P within its ranges from its pullback and testing a daily 50-day simple moving average with a bounce to lower highs with the daily sell signals that improved today, only minus 22 compared to minus 24.5. So today is Monday, and we were up and down in the session in the S&P 500. Now, that S&P 500 algorithm is not going to be the same as it was. Here is what a 3-minute looks like in our Market Maker app. Today, the S&P started with the gap. It made the highs and it traded right along up here. Then later, we came tumbling down, we rolled up, and then we made another lower low. And then during this period, we had a breakout. And we did, off of those lows. And we came straight up in this 3 minute, and then we came right back down. So once again, there was some rotation in that S&P. Get in the alert service via the live trading room and whatnot. We have lots of stock plays here to offer you. That's why we're here, and that's why you're watching the video. But that was a little bit of a late day rally in the S&P 500. So within its correction, within its 50-day simple moving average, within its gap, it pulls it up, it fades it, it comes, it didn't snap this bar right here, and it held it. So this is what the opening bell gap had looked like, and that was the top. Then, as we went through that first reversal on the S&P intraday, we can see where we did finally have that shakeout from the highs of the high right over here, 3,400, and then we made the lows right here at 33.74, and then we popped right up here to that diamond mathematically to that 33.96 area, believe it or not, on that intraday high, or intraday high right there was 33.96. So from that recovery point back down, going into the close and whatnot. So with that being said, that's what it looks like in our system. When you get back over here in the S&P on a lower low test of undercutting that 50-day and holding what that daily sell signal, the stochastics get to a point where they're tradable off of the bottom. And it's the opposite of being overbought. And that momentum, though, until the S&P gets back above the zero line here with a buy signal, meaning that you buy when the stochastics are at the bottom and getting ready to turn. And you have to be experienced at trading this index, particularly on the call side and or the put side. So we do have the resistance coming up, and we'll take a look at that upper trend channel right there below that, right into that 34.20 area. on the S&P, and then we'll take a look and see how the indicators from their oversold, short-term oversold to buy off of the key moving averages is a key, and selling into resistance. And that's what we teach, and we have lots of that available for you. All you have to do is sign up for the free 5-day trial. Get started today. S&P 500 holding that 50-day moving average within a trading range.